Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody. Let's take a look again in the gold market so you can see what's going on right now in the gold. It shows really strong upward action and divergence in the performance of the gold, and other dollar rivals are rising. It's rising. So actually if euro currency is falling without a bearish scenario and the dollar index is rising as well, you could see what's happening on the gold. So this is not normal, and usually this indicator of some external impact on the market. Very often it happens when people start running in the safe haven, when the geopolitical tensions increases or some other external factor. For example, it might be some rising of the bids from the central banks and buying the physical gold. This also might be the case. So currently it is not known, but maybe later next week we will get some publications in the media concerning this topic. But definitely something is going on, because I have checked across the media space. I haven't found any really strong topic that could be the background for this kind of the gold performance. This is something really important is happening right now. So speaking about the technical picture, in general, yesterday we said that gold market is losing the bearish context. So bearish context is falling apart. And even yesterday we said that market could reach at least the 2215 area. And we warn you to not consider taking any new short positions by far. So we're in the background of the events that we have, and we have discussed also some moments on the intraday charts that also suggest that market is losing the bearish context. And right now, as you can see with this recent jump, market totally and officially already has erased the potential bearish patterns. First of all, the double repo has not been formed. That was theoretical chances, theoretical pattern. Yes, it was still valid. I mean the grabber, but now this grabber also has been erased with this upward action. It means that market right now is going to the major monthly target that we have around 2280 area. The only question is how fast this action might be. It's just because market once again hits the overbought area on the weekly chart. And it means that, well, this actually also was a result. Here is this performance that we see on the daily chart. It also was a result of the reaching overbought on the weekly chart. If you remember, we have got the completion of the butterfly, and we expected some reaction, at least the 30% retracement. But take into consideration, very important moment here, is that market was not able to show deep at least the 30% retracement on the background of the reaching overbought and completion of the butterfly. This tells us something about the strength of the market. So if market, even with some reasons, was not able to show even minor retracement, this market is really strong. So that's why now we keep going to the target. But as I said, the speed at which it could keep climbing, it might be more different. At least market will have some technical barriers with the upside performance, and maybe it will not be as fast as it could be if it will not be at the overbought. So considering lower time frame, so we'll take a look at the 4-hour time frame chart. Here we have the butterfly pattern. Now it's coming to the first target around 2240. This might be achieved, and take a look. 1618 stands very close to the monthly target. It's 2262 with the monthly target is 2278. So that's very close to each other. This particular pattern that we could deal with. Once market will hit 2240, theoretically it might be considered some retracement, and we will start thinking about taking the long position. So on the hourly chart, it's not many things to comment. That's our yesterday setup that we considered. Grabbers that we were watching for on Thursday has done well. So indeed, as you can see, strong action has happened. They were formed in this point, if you remember. Here we were talking about the bullish grabbers that have been formed here in the gold. And take a look at the reaction on the target. Once market has completed this area, $20 reaction was to the downside. Well, this is of course not the thing that we were considering speaking about the bearish context, because here, if bearish context starts working based on the grabber on the daily chart, we were thinking about the deeper retracement, of course. But at least it was relatively safe with the ability to move stops to the break-even, because this reaction within the hour for the $20 probably more than enough to protect the position. Later, as you can see, our protection has continued. So that's our conclusion on the gold. It seems that our warnings concerning the bearish context were not in vain. Actually, the situation was starting to change since Wednesday. Now, it is no questions the bullish performance has become absolutely evident, and we could focus on the major targets right now that we have on the monthly chart, because they stand actually not too far, so just $40 above. But as I said, and we talk about at this moment regularly in our weekly reports, that this might be, guys, just the beginning. So we expect significantly more extended performance in the gold in perspective of the few years. So we keep our long-term view on accumulation of the physical gold that we have started approximately 1.5 years ago. So, and we think that nothing has changed yet in this bullish background for the gold market.